Thanks, Karam. That's where. All right, we'll start with me. That one's me. So I'm Phil Long. I'm a lawyer at Miller Thomson. I was asked today to speak about crypto regulation. I did request that there be coffee at every table if you're going to start with a lawyer joining on about regulation in the morning. But you'll have to contain your enthusiasm. So I'm going to talk about security tokens. Briefly talk about the regulations surrounding security tokens, some from a very high level, some of the ones that token issuers should be considering. But more importantly, because this is an investor summit, there's a lot of investors in the room and entrepreneurs, I want to talk about regulation and how investors can actually drive the regulation and how you might not actually need the regulators to get more investment in the space by coming up with sort of what would approximate existing regulations without needing the regulators to actually move. So security tokens, just very generally, would be any token that, because of its characteristics or other reasons, would be classified as a security under securities laws. I'm not going to get into the details of why that would be the case, but let's just take it as security tokens are securities. And if it's a security, securities laws apply. And that's why when we went from the Wild West, no rules, do whatever you want, issue any token, to, oh wait, securities laws may apply. About a year ago, everyone started bending over backwards to not be a security, and the concept of utility tokens developed, which is not a legal concept. There's no concept of that in Canadian law. It's just a made-up distinction to say something other than a security. So the point that I want to make and that I want to speak about is that there are ways to bring more investment into the space, to attract more investment, and that, I think, is by approximating rules and regulations that currently exist that traditional investors know about. So, and then the last few months, most token issuers, or a lot of token issuers, I should say, have started to acknowledge that tokens are securities and have actually started to issue tokens that are intended to be securities. And so the problem here is, how do you comply with securities laws? And the reason it's a problem in this market is that when cryptocurrencies started being issued and the ICO craze really took off, no one had a concept or no one thought to think about securities laws and how they may apply. So you'll see some of the rules that I'm going to talk about in a second are completely counter to what was traditional or standard in the ICO space. So first of all, there is no crypto regulation in Canada. It doesn't exist from a securities perspective. What exists are the traditional securities laws that apply to all securities and have been in place for decades. And we're trying to fit those, fit the new technology, fit token offerings into those existing regulations. So I'll run through very briefly some of the things that token issuers have to be considering, security token issuers for sure. First is marketing and sales restrictions. You can't sell a security to anybody. Only a registered dealer is permitted to sell securities, market securities, solicit sales of securities. So anyone out there, any platform, anyone out there who's trying to just out there selling security tokens, you're offside Canadian law. And at some point, there hasn't been much movement. At some point, the regulators are going to start moving on some of these things that they do see are offside. So you're starting to see platforms which are applying to become dealers that are getting their EMD registrations because they want to be the platform to say, come here and buy your securities tokens through us. So that's process is happening. People have acknowledged that and are starting to address that issue. And as an aside, once those guys are up and running, all the registrations are done, and the people are doing it the proper way, I suspect, in my view, that's when regulators will start taking more action against people who are unregulated. The next thing that is somewhat problematic is if you're marketing a security without a prospectus, which most security tokens would be, you can't market to the general public. Promoters shouldn't be out there on social media hyping up a token sale, blasting out their sales documents on social media communities, Telegram. Like, that's not permitted as a method to sell securities. And also, you're only permitted to market securities to those who are permitted to purchase them. And under securities laws, without a prospectus, you have to rely on a prospectus exemption, which most of you probably heard of, the accredited investor exemption, which is the most common. in which case you can't market to the general public. You can only market to accredited investors and sell to accredited investors. So that limits the pool, limits what you're allowed to, limits who you're allowed to sell to. Now, another distressing thing that token issuers see is everyone hypes security tokens because of the liquidity. It's better than a typical private company share. It's better than just an asset that's not tokenized. There's so much liquidity in a token. Well, if you're using a private placement or a prospectus exempt offering of security tokens, you can only sell to accredited investors, and those people cannot sell to the public either. They can only sell under a prospectus exempt. They can only sell to other accredited investors. You can't take a security token and put it on a typical crypto exchange. The reason, for a couple of reasons: A, that seller is not permitted to sell it to just anyone, and that exchange, if it's facilitating the trade in securities, it's technically would have to be a securities exchange or a stock exchange or alternative trading system. And I can tell you the national instrument regulating stock exchanges is about 80 pages long. It is a highly regulated industry, and so if you're issuing a security token, the liquidity is a big problem in how you work that out. So those are some of the high-level things security token issuers have to consider. There's a million other securities laws that are impacting the field. Crypto investment funds, like investment funds, are highly regulated. ETFs, highly regulated. There's custodial issues. Tokenizing commodities, which is a concept that's coming around. Those would be derivatives. There's all sorts of rules around trading derivatives and commodities. All these things have to be considered, and in a global context, which blockchain is, you actually have to consider the jurisdictions, and you have to consider the rules in almost every jurisdiction that you want to be selling into, or you want your token to be traded in. So it's very complex. And I'm happy to discuss most of these issues or any of these issues with anyone here. But I want to move on, because what I actually want to talk about, because it's an investor summit, is how investors can drive regulations, how you can either move the regulators or move the space into a place where you can get more investment. That's what everyone wants. Entrepreneurs need more money. There's a lot of capital sitting on the sideline. Thank you. And there is precedent, there is examples where markets can actually push issuers and developers into a space where they want more protection. So all those protections I was just talking about, all those regulations, are investor protections. There's a whole other category that people aren't talking about: investor rights. And these are traditional. They've been around for, in some cases, hundreds of years in the traditional world. And I'm going to run through some very quick ones that we see in the traditional market. And implementing these in the blockchain space, I think that once demanded by investors, can really change the space. So things like, on an IPO, in the traditional securities world, insiders of the company are locked up. They can't trade those securities. Directors' offices can't trade those securities for anywhere from 180 days to a year. We've seen this in the crypto space, where founders take their 20% or whatever right off the top, and all of a sudden, they start trading, and token holders suspect that the founders are just dumping their shares right into the market, or driving their tokens into the market. Well, that solution's been solved in the traditional capital market worlds, and now we're starting to see token offerings where they're saying, oh, we're only going to release our tokens to founders over a certain vesting period or something. So you're starting to see the market demand that, and issuers responding. Another thing is insiders of public companies are required to publicly disclose every trade they make in their company's security. If they're buying, selling, you can look up any CEO's profile right now and look at how many shares of their company they own, what they paid for them, when they buy them, when they sell them, all that stuff. And I suspect investors might start demanding to see that of founders of tokens, saying, hey, put your wallet address up here. I want to see when you're dumping your tokens and what you're doing with them. So there's a lot of things that investors can demand. And those things arise because investors demanded them, and because token issuers or share issuers wanted to attract that investment. They wanted to bring money into the space, and they just did it because they wanted that security. Investors wanted that comfort. So as investors, there are a ton of things that you can look to in the traditional securities world and say, we've developed these solutions, we've developed these rights and protections to address certain issues. All these issues are being revisited in the token world, and you can start demanding that token issuers, as a market, you can start demanding that token issuers address these concerns. And some of them are simple, some of them are complex. I don't know, I can't tell you that I'm the person who will figure out how to make the smart contract work to do these things, but it's something to start thinking about and demanding the market. You don't need the regulators to come in and impose that. The market is is powerful, and investors are powerful, and they can really push developers to create what they want. And I think my time is up.
All right, round of applause for Phil Long. Thank you, Phil. Phil didn't get the big introduction he deserves, but Phil Long, corporate securities lawyer at Miller Thomson, and honestly, one of the most knowledgeable guys in this space on the legal aspect. Someone I definitely look to for advice when I'm navigating the industry, that's for sure.